All right, everyone. This is, I think, take number 20 for me. The reason why it's taking me so long to get this out is I just feel so passionate, and I want to get this information out to everyone to hopefully help stem some of the possible panic which people are starting to fall into out there. First of all, by now you've heard that Bear Stearns is getting bought out by J.P. Morgan. And I'm sure that I don't listen to the financial press, but I'm sure they're calling this a buyout and J.P. Morgan is the savior. But I don't want you to be lulled into sleep. This was a failure of a major investment banking firm. And now these guys had trouble, all the way back last year. Okay, they had a couple of hedge funds which blew up. They had huge problems with the subprime mortgage. So this has been going on for a while. So what I want to do is analyze the chart, use it as a case study, so you can then go back to some of the stocks that you own, and you can use this like a template to see if the same thing that was going on with Bear Stearns is going on in your particular stock right now. Now, I want to say this, because we're talking about stocks, this is not intended to be financial investment advice. I don't have any positions in Bear Stearns, although I am short the overall market. If you need financial advice, please call a qualified investment counselor. My suggestion would be Mike Masunis over at Euro Pacific. We don't have any kind of revenue sharing. They're not paying me marketing dollars or soft dollars or any of that stuff. It is purely that I have investigated these guys and I believe they will be a valuable resource for you going forward to get financial advice. So let's talk about Bear Stearns. First of all, let's zoom out a little bit so we can get a bird's eye view. And you can see that this is just a gorgeous trend. Okay, the market's moving up. We're looking at a monthly chart, by the way. Market's moving up. Moving averages are separated. There's a lot of distance between the short-term and long-term moving averages. This is just all pointing to trend. No problem. Okay, the market is moving up. Volume is expanding even as the market starts to move up. Everything is going along as it should. Now, as the market's going along, we have to be aware of just a very few types of patterns. We want to be looking out for triangles. Triangles are an indication of a compression pattern. They're an indication of momentum. But there's one particular type of triangle that we have to watch out for because it's like a yield sign, or it's like a signpost on the freeway which says, "Hey, watch out, your exit is coming up." Okay, and that is the expanding triangle or the megaphone. Okay, the megaphone is a difficult pattern to trade. I've talked about this before. It's because you keep getting higher highs and higher lows. And the market keeps breaking out from one high to the next. It keeps breaking out from one low to the next. It can be very, very difficult to trade. But it is still a big, fat warning. Okay, when you see that, you need to start thinking, warning, warning. Okay, now, I do also want to say that, a lot of this is really easy in hindsight. Okay, so we can come back and calmly look at the charts. But, it takes guts or cojones, if you will, to actually pull the trigger on this stuff. And you have to realize that you don't want to take any of this in isolation. What it means is, don't pull one thing out of this analysis, match that up with a particular chart pattern and say, okay, that's it, I need to get out. The reason why I say that is because Bear Stearns in particular came into a bit of an expanding triangle here on the monthly chart right here. Okay, so if we kind of zoom in here, you can see here, okay, a bit of an expanding triangle. Admittedly, it's not that clean, but again, it's not just the pattern. Okay, remember that. It's not just the pattern. We've got to pair all of this stuff up and look at what's going on in combination with our other tools. Okay, so we see here, we're looking at the expanding triangle, this megaphone pattern building here in early 2006. And of course, the market breaks out. The next sequence of events is very, very critical. Okay, now when markets top out, here's typically what you'll see. You'll see the market break out of a pattern, form a reversal up here. If you remember from your candlesticks, this is the evening star. which can foretell the market moving down. And let me say this right now. You're going to see every Tom, Dick, and Harry coming out with an analysis of Bear Stearns over the next coming weeks and coming days. This stuff is very easy to do in hindsight. The key is getting to the point where you can start seeing this stuff ahead of time so you can not only avoid it, but you can profit from it. So keep this in mind.